Hello traders, my name is Tomasz Wiśniewski. I'm a chief analyst in Alpari Research and Analysis, and this is daily analytical report. Let's start as usual with the calendar, and on the calendar you can see that it's pretty busy today, especially for the British pound. We also got an inflation data from Germany, but no surprises here. The data came in line with expectations. Euro is in a deep downtrend. Today we have a small rebound, but it's all more take profit action. This is nothing significant. It's not a reversal. It looks only like a typical take profit action after strong drop. I think that from the fundamental point of view, at least for one particular instrument, the most important data or event is the tweet from Donald Trump, and I'm talking about oil, because Donald Trump tweeted yesterday that hopefully Saudi Arabia and OPEC will not be cutting oil production. Oil prices should be much lower based on supply. So basically he kicked patient who was already wounded. Oil was in a deep downtrend, but this tweet sent the oil to new long-term lows. It was expected even without this tweet, but this information from Donald Trump just made the situation worse. Well, what we are still waiting for today is average earnings, including bonuses from UK, and that would be it in terms of the data on Tuesday. Real fireworks will happen tomorrow, where we start with retail sales and industrial production from China. Then we have GDP from Germany, important for Euro, obviously. Pack of data from UK with the inflation on top, and GDP from Eurozone and inflation from United States. So definitely tomorrow will be the most important day, even in November, in terms of the data. But it's still to come. Now we can look on the charts, and we start with the euro dollar, because euro dollar started this week on a back foot. As you can see, the price broke the horizontal support on 1.13. 1.13 is the psychological barrier as well. So it was perceived as a strong support, especially that we had a bounce here and we had a bounce here in October and August. The price broke this horizontal support and went lower. From the technical point of view, this breakout was supported by the fact that the price was in a deep downtrend. Here, the price created inverse head and shoulder formation and got a buy signal here. That was a false breakout though. So false breakout is a strong movement in the opposite direction, and the price went significantly lower based on the fact that we had this false breakout. Instead of the inverse head and shoulder pattern, what we got is a flag formation. So this is an upper line of the flag, this is the lower line of the flag. The price broke the lower line of the flag and went down. We had a continuation of this movement, lower lows and lower highs, and the price made a decisive blow yesterday here. After the breakout, we tried to test this line as a resistance, but those two tries here and here were unsuccessful. Why did the price bounce here? The answer comes from the daily chart, because this black line is the long-term neckline of this head and shoulder formation. Previously, the neckline was here. There was left shoulder head and a right shoulder. But the recent price movements create a situation where the head and shoulder looks like that. So we do have a bounce from the neckline. And actually, this bounce from the neckline can be an invitation for a take profit action. And it would be really, really nice if the price tested 113 as a closest resistance. It would be definitely nice for the bears, which did not manage to open a short position here. Now the train is gone from the station and you shouldn't chase this position because the risk to reward ratio is really bad. but the price climbing back, touching 113 and drawing a bearish reversal pattern can be a great occasion to open a long-term short position. So this is our view on euro dollar. Now the instrument which was negatively influenced by the Donald Trump, so WTI oil. This is the reaction on that tweet. So buyers try to make a correction. We stopped exactly on this downtrend line, but actually this it depends how you will make this downtrend line, because this is more short term and this is longer term. So the price was here, the tweet came and boom, they were trying the reversal, but Donald Trump killed this reversal and the price went lower. We are on a very important support because that is a 50% Fibonacci here, and also the top from the end of November 2017 and from the beginning of February 2018. The drop is super steep, so the market is oversold, right? This is for sure, which creates an occasion for a reversal. But we are trend followers, and I do believe that trends are always more, it is always more probable that the trend will be continued, right? So in my opinion, if the reversal will happen, this will be only take profit action, nothing more. Because, well, take profit action is kind of needed, kind of expected, and there are no signals whatsoever about the potential reversal. So, in the long term, we are still in a negative territory. In the short term, the chances for a bullish correction are rising. Why? Because the market is oversold, that's the first thing. And the second thing is that we are on an important support. Obviously, I will not even consider opening even a short-term long position if I will not see a price action here. So for the short-term buy signal, what you need to see here is a long tail, so a hammer candle or a bullish engulfing or something like this. But the situation on oil is very, very, very bad. And now second instrument which is negatively influenced by the stronger dollar, this is gold. So gold was doing quite alright for the past few weeks because we managed to break 23.6, the correction was going higher, and we stopped on 38.2, we tried to break it, but then we tried to break it again, which was showing a bullish potential. But the price eventually bounced from this level, buyers gave up and came back below 23.6 again. Before that, we had a triangle, lower line and upper line, and the breakout of the upper line of the triangle and a buy signal. But what we eventually got is a flag. So those red lines, this is a flag. Flag is a trend continuation pattern. Trend before the flag was negative. So uptrend, downtrend, flag, downtrend. What would be nice from the technical point of view would be bounce from the lower line of the flag, then the test of the blue resistance, and then a breakout. Although I'm very, well, I like gold, I like physical gold, right, as a way of investing money in the long term. But on the Forex market, if we talk about future contracts, derivatives, I have to admit that going long now on gold is not an option, according to the price action which is happening here, right now. So guys, those were the instruments that I mentioned on the Trading Sniper video. Now let's, as always, at the very beginning of the week, well, it's Tuesday, but it's our first daily analytical report. Let's analyze new instruments from the scratch, because I always want you to see the decision-making process, right? Because many analysts, they just show you the chart which was prepared before. They try to explain, but I want to show you the decision-making process. Australian dollar to Canadian dollar, strong resistance here. Support, 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 resistance, resistance. We do have a bounce from this resistance, but the price is still pushing higher. This setup is technically not very interesting. I think that most of the setups on Australian dollar to Swiss franc will not be so interesting. Because why? Because we had a short signal here, but then the price reverses, and now we have a short signal again. Maybe this one is quite alright. So what we got here is a flag in an uptrend, so it's promoting a further upswing. How about the long-term situation? So here is this very, very clean resistance, and we just broke this resistance, tested it once and twice. So it's not a surprise that the price is bouncing from this level. I think that the crucial here can be this support. So the breakout of the gray line will give us a sell signal, but the price breaking the daily highs, that will give us a buy signal. So this one will stay here. Australian dollar to Japanese yen. Okay, let me see this one. So there's this resistance, which is now being tested as a support, and that is actually very good. And on our chart, it is also a flag. So what is happening here is something like this. Let's check how deep was this reversal. Almost 38.2, beautiful. 38.2 is also a support. So the thing on Australian dollar to Japanese yen is that as long as we stay above the gray area, there is a positive sentiment for this instrument. Australian dollar to New Zealand dollar. We are approaching super important support after the bounce from the super important resistance. This is a weekly chart, remember this. Before we're gonna get to the support, we need to crush this one. So the situation here in overall is bearish, right? You remember this. Left shoulder head and right shoulder, then a triangle, then a breakout. But the thing is that we are too close to the major support, and the risk to reward ratio is not good here. So opening a short position above the support is not the smartest idea on the record. Even despite the fact that in the long term we should test this line. But just the timing is bad. We always need to, when trading, you always need to think about the risk to reward ratio. And here in this case is not encouraging us to open a long position. Australian dollar to American dollar. Let's check this one out. So actually our scenario from the daily analytical report, I already deleted those, but our scenario is happening here, because here we are expecting an upswing towards this resistance, then a downswing, and then an upswing, because that would create an investment shoulder formation, and this is what the price is doing now. Left shoulder head and right shoulder. The buy signal will be triggered only when the price will break this gray resistance. So even with a bounce here, I would not think about going long. That would be a bit too early. So that's pretty much it. Where is the support? I think this is the local support, so price breaking the lower gray area can be a negative sign for the Australian dollar to American dollar. So let's leave it. Swiss franc, Canadian dollar, Swiss franc. This will be a good occasion, but this will be a good occasion when the price will break one of those lines. This is H4 chart, so it can happen really soon. The target for the upswing will be this line, the target for the downswing will be this line. So it's kind of an inception, right? You have smaller triangle inside of the bigger triangle. So yes, this will be interesting, so let's leave it on our platform, on our radar, but in the same time I will remove this one. Canadian dollar to Japanese yen. As you can see, I don't want to have too many charts at once, it's a distraction. And you don't have so many good setups at once, you need to pick the best out of the best. Trading less is earning more actually, so. Let's try Canadian dollar, Japanese yen, I don't see anything interesting. Swiss franc to Japanese yen, what we are having here. Correction, well, nothing. Unfortunately, nothing. Euro to Australian dollar. That's the next instrument I want to show you. Here, after this double top formation and a breakout of the horizontal support, we do have a strong sell signal. We broke the uptrend line. The next potential target seems that it will be this horizontal support. Let's check it with Fibos, 38.2, yes. So the price getting there seems really possible. The thing is that the risk to reward ratio also is bad. So if you really want to like have a stop loss, I don't know, this line seems alright. So even with this line, not this line, when you go short here, you have 320 pips take profit and 300 pips stop loss, which is not the best risk to reward ratio on the record. Euro to Canadian dollar. Another instrument. What do we have here is a deep downtrend. Unfortunately, there is this horizontal support here. Here there is a flag. Downswing correction, most probably a downswing. On our daily chart we have this rectangle which is promoting a further drop because rectangle is a trend continuation pattern and there was a drop before this rectangle was created. Euro to Swiss franc, this is one of my favorite, and to be honest with you, I have a short position here which is already protected with this stop profit order, so it's already without any risk. I'm gonna explain you this in a bit greater detail because it's a good trading lesson. Horizontal support, which became a resistance. The price tried to break the downtrend line here, managed to do this, but they did not follow with the upswing. What the price also tried to break is this neckline of the left shoulder head and the right shoulder. So they failed and they did not manage to do this. Instead of this, the price created a flag. But it's not the only flag here, but let me change the color first. It depends how it will drive. It's a wedge or a flag. But there was another one here and here, or if you will, here. Not to confuse you with too many lines, what is the most important thing is that this line got broken and this line got broken, so that is a strong sell signal. As you can see, we stopped on more or less wide area of support. Resistance, support. which is a good place for a bounce, but this should be only a bounce, and eventually the price should go lower and aim for the lows from the beginning of September. Next one, euro to British pound. So here the main is obviously Brexit still. Entering this euro to British pound pair is for me personally a bit too risky at the moment, so I'm not the fan of entering here. And not only about the fundamentals, but the technical situation is also not very encouraging, not very tempting, so thank you very much for this. I'm not gonna enter there. Euro to Japanese yen, unfortunately sideways trend, and you shouldn't trade inside of a sideways trend. If I had to trade, I would go short, which is based on the fact that we are below this important resistance, support, 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 resistance, 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 support. And we bounced from this. Also, maybe Fibos will be good here. No, Fibo, well, more or less. But the setup is negative. Also downswing, upswing, downswing, correction. We should see a further downswing, but that's not the interesting setup, so I'm gonna remove it. Euro to New Zealand dollar. This is one of the strongest sells I have recently seen, and this strong sell is approaching the horizontal support. The trend line was already broken, obviously, and let's check the Fibos. Okay, we are on a place which may be a good trigger for a correction, because we are on a 38.2 and this yellow area, which may be a good occasion just to take some profits, right? The trend is very strong, because as you can see the downtrend line is very far from here, and well, the movement towards 23.6, which was also a horizontal resistance here, can be very, very possible and probable. So Fibos here should be important. That's interesting. Look, 38.2 is technically relevant. Resistance, resistance, support, support, support. 23.6, support, resistance. 50, support, resistance, resistance. So yes, everything should move in line with the Fibos. British pound to Australian dollar. Let's check this one out. What do we have here? Is the price is about to aim this horizontal resistance. Head and shoulder formation. Head and shoulder formation. The downtrend line. It kind of all looks negative, but I'm gonna say pass on it. British pound, Canadian dollar, sideways trend, no trading signal. British pound, Swiss franc. Let me check the objects list. Too many objects. It was too confusing. Here. Weekly chart from the previous week is dangerous, because that can be an evening star. For an evening star, we need this week candle closing below the first of before this one. So actually, that can be a good setup. That can be an interesting setup. Price closing below this will be a sell signal based on the weekly chart. Let's keep it to see the chances for this. Next one, British pound to Japanese yen. we need to start with the higher time frame. So higher time frame shows us the bounce from the horizontal resistance. Bounce correction. Most probably a further downswing, but it's not super strong. British pound to New Zealand dollar. And that can be a good invitation for a short-term bullish correction, because that's a double bottom formation. But no, nothing serious here. British pound to American dollar. I don't like the situation of British pound recently. Those Brexit talks are messing with the technical situation here. Objects list. What I would consider here. I'm sorry. What I would consider here relevant at the moment is only the triangle. Breakout of the red line, upper red line buy signal, breakout of the lower red line, sell signal. That can turn ugly when we will break the lower line of this triangle. Okay, let's recap those instruments that we have as for now. The rest of the instruments we'll analyze tomorrow, not to overload with the setups. As I said, the number of interesting trading setups is limited. Trade less to earn more. You don't have to open 10 positions. You just need one good position. Right, so euro dollar, long-term sell, but the chance for the short-term buy are pretty high. Oil, the same story, long-term sell, but the chances for short-term buy are here. Gold, long-term sell when the price will break the lower line of the flag. Australian dollar to Swiss franc, potentially we can get a nice buy signal, especially when we'll make new weekly highs. Australian dollar to Japanese yen, the situation here is similar. So as long as we stay above the gray area, the sentiment is positive. Australian dollar to American dollar, breakout of the upper gray area buy, breakout of the lower gray area sell. Canadian dollar to Japanese yen, triangle inside of the triangle, breakout of the upper line buy, breakout of the lower line sell. Euro to Australian dollar sell. Euro to Canadian dollar sell. Euro to Swiss franc sell. Euro to New Zealand dollar sell, but the risk to reward ratio is really bad. British pound to Swiss franc, well, price breaking the yellow line, that will be a sell. And British, but not the strongest one, so we are waiting here for this. Yes, that's why I said that it's not the strongest, because we are waiting for this evening star to be finished. And the British pound to American dollar, also nothing. We are waiting for the breakout from this descending triangle pattern. In theory, it should be breakout to the downside, which can bring us a strong sell signal. So guys, those were the instruments that I prepared for you today. I hope you enjoyed them and you enjoyed the daily analytical report. Now we're gonna have a short break. After that, the webinar about basics of the Forex market, and rest of the market we will analyze tomorrow. So stay sharp, stay with us. We will talk about indices and other Forex instruments. So thanks very much. In the meantime, visit our Twitter account, our website, our Facebook, our YouTube. All the best.